You know, it's kind of hard when you apply a strategy to some sort of event and find out that the results don't work, while in some other arenas, the results do work. And so I want to spend some time today talking about the difference between speculation and investing and trading. A lot of people use these two words interchangeably. You hear people saying, I'm a trader, or I'm an investor, and I'm a speculator. And everybody wants to think that we are all doing the exact same thing. But truth of the matter is that in certain markets, certain strategies work better than in other markets. Now, last year for cryptocurrency was basically buy the dip strategy. Anybody who went ahead and bought the dip made money. It wasn't really anything that you needed to really think about. All you needed to do is look at the charts, find the coins, and even with Bitcoin, I mean, riding Bitcoin from 1,000 to 20K, if you look at the charts, it was pretty much buy the dip. And everybody on Twitter, everybody on social media was talking about this. And I think to a certain amount of credit, a lot of people got lucky, and some people actually did well with it. Now, that type of market is what I call a speculative market. So 2017 is characterized as a speculative market, meaning that many of the fundamentals were not coming close to the technicals. The price action was based off of rumors, price manipulation, you name it, but the fundamentals were really not there overall. Now, 2018 has been a whole different story. Now, where we're seeing now is the reverse. It's where you're not buying the dip anymore, because if you do buy the dip, you pretty much are going to lose money. And so here it's called sell the rally. That in both cases, it's still considered to be speculation because you're trading in and out of the coins. And more often than not, crypto is and let's be honest here, crypto has they're in projects, but they don't really have any sort of revenue. They don't have any sort of income. And so in many cases, it's almost like any other type of financial market where you're trading speculative assets, and hopefully it goes from one person to the other. So there is a strategy for that. It's no different than going on eBay trying to figure out what the price of a baseball card is. Now, somebody can argue differently and say, well, they are investments. So let's talk about the other side. How are these protocols investments? Now, as an investor, the difference here is you're looking for long-term value that eventually drives the appreciation of a price. Usually, for example, like in stocks, you have the stock represents ownership of a company, and that ownership gets translated by the earnings that stock makes. And so the price of the company eventually derives that money over. Now, again, I won't have to go far into detail about what's a security or it's not a security, because Bitcoin, for example, is not a security, and so technically it's not a stock, which means it's not really an investment. So it really depends on your definition of what that looks like. But in traditional markets, specifically when you're dealing with investing, you're usually dealing with an operator that has some certain degree of certainty that adjusted for risk would most likely have some sort of appreciation. And so I think a lot of people got caught with the fact that, yes, it is investment to a certain extent, but it is more of a speculative nature. Speculative nature meaning that you do have players in it who are just chasing price. You have the FOMO, you have the FUD. And this market, crypto market, is more of a speculative market. It's not, in my opinion, a asset yet, although there are plans to digitize the asset. There are plans to make ETFs, to make it into pension funds and whatnot. But the reality is that cryptocurrencies are a very, very speculative game. Now, given that idea, the importance of technical analysis and many of these other techniques and strategies actually work very well. Because it is a speculative asset, it does lend itself to market psychology much easier than some of the other assets, like, for example, stocks, real estate, gold, and bonds and whatnot. So once you recognize the type of asset it is, whether it's a matured investment asset like stocks or an immature investment like crypto, then you begin to apply different rules in that. Now, currently we are obviously in a somewhat of a bear market right now, I would say, and I'd say that we are in a bear market just because if you take a look at the charting patterns and the price action, it's pretty much been sell the rallies ever since mid-January. And so right now, the strategy to employ is more still of a speculative nature. It is about looking at it from the other side, which is sell the rallies and buy the counter dips, but you're not really holding long because the prices just keeps on falling lower. So all I wanted to talk about here was if you're looking at specific trading opportunities and markets, think about first off where you are in that spectrum. Are you in a speculative market, or are you in a mature market, or are you in a very, very mature market or illiquid market? And the second thing is you want to identify is what phase are you in? Obviously, the bull market is a different strategy versus a bear market versus a range bound. All right, guys. Well, hopefully you enjoyed this video, and I'll talk to you guys soon. Bye-bye.